If you give the U.S. government $100,000, they give you back about 60 or 65,000 in purchasing power. It is that's really moving the gold price. The idea that foreign producers pay the tariff, not U.S. consumers, is the strangest form of fiction. The fact that it's believed by a lot of Americans is explained by H.P. Barnum's famous quote, "There's a sucker born every minute."
Hello and welcome to Soar Financially, a channel where we discuss the macro to understand the micro. My name is Kai Hoffman. I'm the @JR Mining guy over on X, and of course, your host of this channel. And I'm looking forward to bringing back Rick Rule. I don't think he needs a lot of introduction. He's been on this channel a few times, but he's the founder of Battle Bank and just a legend in the investment space, particularly in the mining space, of course. Really looking forward to catching up with him. We haven't spoken in a while, so of course, we have to talk about tariff impacts on the mining space. Critical minerals, like why are they so important all of a sudden? And what else is happening in the mining space? So a lot to discuss today. I think the conversation has been cut out for us by macro events. We'll take it piece by piece here. Before I switch over to my guest, hit that like and subscribe button. Helps us out tremendously, and it's a free way to support us. Tremendously appreciate that, and thank you for that. Now, Rick, it's great to have you back on the program. It's good to see you again.
Hi, thank you for having me back. I enjoy our conversations, and good luck with your conference.
Thank you. Yeah, it's happening this week. So we got to get you out in November, Rick. We'll have to figure that one out. I need to reach out to your colleague. We need to get that on the books one of these days. So, Rick, I said it in the intro. We have lots to talk about, of course. Gold price was really, really interesting to watch and monitor over the last couple of months. It's retreating right now, but we touched $3,500 gold. What was the gold price telling you, and what should it be telling us?
Well, I think the gold price has been telling us something really since the year 2000. I realize at age 72, Kai, my timelines are a bit longer than other folks.
Yeah.
But the truth is, what has moved the gold price through history is investors and savers' lack of faith in the maintenance of their purchasing power in fiat-denominated currency instruments. The ongoing budget dilemma in the United States, the fact that in the U.S. we have $36 trillion in on-balance sheet liabilities, and the net present value of unfunded entitlement liabilities exceeds $100 trillion, tells you that nervousness about fiat-denominated instruments in the U.S. dollars are very, very, very valid concerns. As those concerns become more apparent, gold does relatively well. Will it be stair steps to heaven, which is to say, will it advance without a retreat? Of course not. Kai, the last period that we had with a really explosive growth in the gold price relative to the US dollar was in the decade of the 70s. And by way of illustration, in 1975, when there was a sustained rise in interest rates, the gold price fell by 50%. The bull market wasn't over. It was just a very ugly hiatus in that. So be prepared if you're in the gold business for some pullbacks. They're normal, they're natural, they're to be expected. Don't get shaken out.
No, exactly. I think that's what we're seeing right now. Don't get shaken out. Patience. I started posting the gold price daily, and just this morning, somebody posted a comment. It's like, "Oh, it's a massacre out there." I was like, "Really, massacre? $1,200 is a massacre." Okay, $3,150, not so much, in my opinion. What do you tell these investors when you hear those comments? Like we've talked about it last time as well. Like one of the comments was, "What has gold done for me lately?" Right. So what do you tell them? Is there a renewed message? Is there anything else, anything new we can tell them?
It sounds really cynical, but the people who pay attention to the gold price day to day and don't have enough courage of their convictions, that they get sold out on a 7% decline, an 8% decline, are people who feed my net worth. People who insist on buying high and selling low should be my best friends. I'd like to help them. But I come from the school where you try to buy low and sell high. One of the things I've noticed, Kai, and as you know, I've graded tens of thousands of portfolios over the last 25 years, for free, by the way. One of the things that I have learned is that in financial goods, unlike physical goods, people need the price action to reinforce the narrative. If you were to go to buy, a winter coat or something like that, Would you prefer to buy a coat where it had been marked up from 400 euros to 450 euros? Or would you prefer to buy a coat that had been marked down from 400 euros to 350 euros? You buy coats well, but people don't buy financial assets as well.
No, it's true, actually. And I catch myself doing the same thing from time to time when I'm sort of convinced that this is the stock to own or so. But I look at the price action and nothing's happening. You wonder, am I on the right track here? Obviously, right? You're looking for confirmation bias. I think that's just human nature, isn't it?
That is human nature. That's a wonderful lead-in, Kai. We believe ourselves to be fact seekers. We believe ourselves to be rational, impartial viewers of the world. We believe that the process is that we take in information from all sources, process that information rationally, and make logical decisions. That's ridiculous. Most of us, in fact, search for information that reinforces existing biases and prejudices, which is why we do the same things wrong time and time and time again. Even after 50 years, I make fairly consistent mistakes. I'm aware of those mistakes. I've seen the mistakes. I'm often able to pull myself back from the brink by understanding that I've been guilty of information bias. But the truth is that we all are guilty of that, and we all are guilty of not understanding and not guarding against that very dangerous phenomenon.
Yeah, it is a dangerous one, but it's natural, as you said. Rick, we got to look back at the gold price. Like, I was just looking at the gold price chart here on my other screen, and since mid-December, gold pretty much moved almost $1,000 from $2,550 to $3,500. An insane move in a very, very short time. I think we need to zoom in and figure out like what has been driving gold. You said fiat, currency devaluation. Of course, that's been an ongoing trend, but there must have been a catalyst or something must have happened that really pushed things to the brink here.
I think a conjunction of catalysts. We talked on your show 3 years ago about the fact that the United States government was doing two things that were wrong. They were weaponizing the US dollar. They were utilizing the SWIFT banking system to impose US policy extraterritorially on other countries. At the same time, whether or not you agree with Russian actions in Ukraine, the US government stole $300 billion, pardon me, worth of Russian holdings in US Treasuries. Foreign central banks, after those two incursions, had no choice but to diversify their holdings out of US dollars. Given that there was no viable alternative currency, a lot of the money started going into gold. So I would suggest that the first catalyst, if you're talking about the recent move in the gold price, happened 3 or 4 years ago with the weaponization of the US dollar. A second catalyst, however, has been the bad arithmetic around US Treasury securities. If you believe in the CPI, then you believe that the deterioration of the purchasing power of the US dollar is about 2.5% a year. And if you believe the CPI number, then the current yield on US 10-year Treasuries at sort of 4.5% a year is not bad. You're getting a 200 basis point real yield in a riskless security. If you believe, like I do, however, that the purchasing power of the US dollar is actually declining at 7.5 or 8% a year because the CPI is a manufactured statistic, then the idea that you're getting paid 4.5% a year in a currency where the purchasing power is declining by 7.5% a year means that if you hold the world's premier savings instrument, the US 10-year Treasury, you are losing 3% a year every year for 10 years. In other words, if you give the US government $100,000, they give you back about 60 or 65,000 in purchasing power. It is that's really moving the gold price.
Lots of things happening, of course. Like mid-December, people understood, okay, we have a new president in the White House as well. Uncertainty exploded around policies, DOGE, tariff announcements. It just all started there. It really catapulted higher early April, of course, around Liberation Day, because the uncertainty was at insane levels. I don't know any other term to sort of mention or to say it, actually. Like what we're seeing right now, and is sort of that uncertainty leaving the market. It seems like the hot air is being left out of the balloon a little bit. Would you agree with that? And how much input did the tariffs have here on the gold price?
I think that people use narrative, tariffs, Trump, whatever it might be, as an excuse to take actions that they want to take. I believe that the underlying move in the gold price is all due to arithmetic, all due to math. But math bores people. They feel it in their bones and they express themselves because Trump might be the manifestation of their fears, or because they don't like the concept of the Department of Government Efficiency, or they don't like deportation without due process, or they don't like tariffs. I think that those are all rhetorical excuses to express the same form of selection bias, whether it's right or wrong, that we described earlier. I am not one of those who believes that the near-term phenomenons are the drivers. I believe they're the excuses.
No, good points there, Rick. I just saw Ray Dalio opened a $320 million position in gold just yesterday. I think I just saw it come across my Twitter feed here. What do you make of that? It sounds like somebody's top ticking here.
Well, I don't believe it to be top ticking. I believe that this may be a near-term top, but after 72 years, I'm not a near-term guy. Listen, my formative years were the decade of the 1970s. That's when I was a young businessman. That's when I came of age. That's what I saved. That's when I invested, that kind of thing. In the decade of the 1970s, the US dollar lost 75% of its purchasing power, according to the Office of Management and Budget. Over 10 years, the US dollar lost 75% of its purchasing power, not relative to other currencies, but in an absolute sense. During that period, where the US dollar lost 75% of its purchasing power, the gold price went up 30-fold. Now, I'm not going to suggest to you that the gold price is going to go up 30-fold from here, but I am going to suggest that there is a probability that there is a move in gold that is concomitant with the decline in purchasing power of the US dollar, more or less, not exactly. If you follow that line of thinking, over 10 years, what Mr. Dalio is doing is simply buying purchasing power insurance. He's not speculating on gold. He's not even investing in gold. He is using gold as a hedge against the declining purchasing power of the US dollar and the inherent negative real yield on US dollar denominated debt securities.
No, it makes a lot of sense. He's really hedging his bets on other fronts as well. We'll see how that plays out, of course. But I'm in his camp. It absolutely makes sense, as you said. Like you either trade or you hold, and I'm in the hold camp personally. So I'm not a trader of gold personally. Rick, we got to talk about tariff impacts and in general like policies out of the White House on the mining space. Like we can't get around that topic. A lot has been going on. I'm personally quite happy that it's being discussed. Led a lot of headlines about critical minerals, even gold. Although personally I thought it was a bit overhyped when Joe Rogan and Elon Musk talked about gold. But it really moved things back into the limelight for us, and I think made people aware how critical minerals are. And not critical minerals. You get my point here. I'm trying to be funny a little bit. But what is your policy take out of the White House? Let's generalize a little bit on the commodity space in general, and then we can get granular on certain little commodities here.
Tariffs are taxes, and taxes are bad. Ipso facto, tariffs are bad. The idea that foreign producers pay the tariff, not U.S. consumers, is the strangest form of fiction. The fact that it's believed by a lot of Americans is explained by H.P. Barnum's famous quote, "There's a sucker born every minute." Mr. Trump, like all of his predecessors, is a transactional leader. Tariffs are a wonderful way to reward his friends and punish his enemies. In that, Mr.
Freudian slip right there.
Absolutely. Mr. Trump is no different than Mr. Biden. He's no different than Mr. Clinton. He's no different than Mr. Bush. He's no different than the Donald Trump that inhabited the office in the first term. He is transactional, and tariffs are a wonderful, wonderful tool for selective enforcement, for punishing one's enemies, and for rewarding one's friends.
How does that translate now into the mining space? We got to talk about, like, copper is still being evaluated. Certain critical minerals are still being evaluated. I forgot the paragraph or section under the Review Act or whatever it's called. But like, how does that impact now the commodity space?
Well, to the extent that the mining business is cynical enough, following the old maxim that elections are advanced auctions of stolen property, I suspect that if the mining industry bundles campaign contributions in favor of allies of Trump, that the tariff legislation around mining, and by the way, the subsidies around mining, will be very generous to the mining industry. I don't believe for a second that Mr. Trump or Mr. Biden will do the right thing. I think that they'll do the thing that rewards their friends and punishes their enemies and ensures that they have the financial resources to continue in power. I note that even under Biden, because there was a change in the politics around mining, that there was a change in policy. Early on in the Biden administration, myself as a uranium investor was vilified. I was the worst thing on planet Earth. I was a profiteer from Hiroshima, Nagasaki, and 3 Mile Island. Towards the end of the Biden administration, they were looking to subsidize the domestic uranium industry. I went from being vilified to being subsidized. Now, Kai, to be honest with you, I felt a lot more honest when I was being vilified. But I think I need to say that. With regards to critical minerals, if you get yourself away from the tariff scheme, if you look at the increasing geopolitics around so-called critical minerals, life gets extremely interesting. By the way, I'm not suggesting that subsidies and tariffs aren't interesting, but it's a different topic. What you see going on now is a reversal of what you saw in the period 1982 to 2022. In that period, you saw increased globalization, increased integration of supply chains, which is a long way of saying peace. What you've seen post-2022 is the much more aggressive expression of nationalism. The Chinese trying to muscle their way into the global system, securing access to resources the same way that the United States did in the 1950s and 60s, the same way that Europe did in the 60s and 70s, the same way that Japan did in the 70s. You're watching the Chinese do exactly the same thing that we did. You're watching the European Union too look for access, exclusive access to supplies so that they can compete with Japan, so that they can compete with China, so that they compete with the United States. You're now watching the Middle East and India in the same game. To the extent that there are geopolitical constraints around access to materials, you are going to see government action that allows their industry to access supplies that would be politically threatened. What that means in the United States, as an example, is that you're going to begin to see the overt subsidization of U.S. companies trying to secure non-Chinese source supplies of critical materials. You're absolutely going to do this, going to see this, whether or not you believe in it or not. That's something that's going to occur. It's going to be an investment theme because it's going to lower the cost of capital among certain favored companies. A new form of fundamental is going to have to be political analysis. Does the issuer that you're looking at have access to credit from the Industrial and Commercial Bank of China? Do they have access to credit, subsidized credit, in other words, a lower cost of capital from the United States? Do they have access to subsidized capital? In other words, are they looting the European taxpayers? This is going to be a new form of security analysis. What facility do these companies have for exacting fraud on taxpayers?
Lots of interesting topics. One thing that stuck with me, Rick, I need to jump down that rabbit hole with you real quick, is really lobby work. And we haven't talked about that. It's like, I like finding new topics we can discuss. And do you think the mining industry is doing a poor job at lobbying in Washington and maybe around the globe for mining in general? Or do we even, like, can you elaborate on that topic?
Mining hasn't been a business that's mattered in the United States for a very long time. And I would say that the mining industry, relative to its importance in the U.S. economy, has done a reasonable job protecting their interests in Washington. But the tide was against them. There was a groundswell of support, sometimes misguided, for an environmental movement that rightly noted that historically the mining industry was less good than it should have been around environmental degradation. And there wasn't very much that the mining industry could do to change the opinion of past sins. There is a new realization in the United States that whether we like it or not, the world is for a while breaking down into geopolitical spheres. And the maintenance of the material standard of living enjoyed by Americans requires access to raw materials, including not just US sourced raw materials, but raw materials sourced in other places with US capital and US technology, or at least with capital and technology from companies that are sympathetic to and aligned with the US. My friends in the Canadian mining industry have not been slow on the uptick. If they are promised access to lower priced capital, they're on it like white on rice. I know myself, I have fairly close connections to a senior Canadian investment banker who is spending 1 or 2 days every 2 weeks in Washington, D.C.
Hmm.
This is a guy who makes an awful lot of money structuring transactions in Canada, sitting at the apex of the pyramid of mine finance. And he has decided, he's a fairly young guy, that in terms of his investment banking practice in the next 5 years, the most beneficial use of his time is developing deep connections and a deep understanding in Washington, D.C., associated with the U.S. government's bipartisan goal of securing access to raw materials to support America's material standard of living.
And it's quite interesting. I saw a video of Robert Friedland shaking hands in Saudi Arabia with the Crown Prince and Donald Trump. Like, I now know you know Robert Friedland quite well, Rick. What do you make of that? I know he's always where the money is, either China or now Saudi Arabia. Can you put some perspective around that for us?
Robert is strategically as good a guy as I've ever met. He's 5 years ahead of the world. He is also, I think, the best salesman I've ever met. All I can say is now that he has access, and he has very high level access in Saudi Arabia, and Saudi Arabia has expressed an interest in expanding their role in global minerals. He's the best salesman I ever met. And he will, repeat, he will be able to sell President Trump. There is no doubt in my mind that Robert will work his way in there. And by the way, he should. There is nobody better at understanding the dynamics of exploration, the dynamics of relationships with host governments. Look at the work he's done in Congo.
That's my next part. That's a good segue.
There's nobody better than Robert Friedland. So while on the one hand, I guess he represents a threat to Trump because he's such a good salesman. On the other hand, I think as an ally, Trump couldn't have picked a better entrepreneur.
Absolutely, Rick. I still have a feeling you're holding back with something. What's Robert really working on there, Rick? I think it seems like you know.
He's not working on any one thing. Robert understands the way the world works. He understands that we have underinvested as a society in extractive industries for 35 years, in particular copper. And Robert wants to be part of the solution. In a capital-intensive business, which mining is, cost of capital is everything. The Saudis are cost of capital. Trump is cost of capital. Robert now has 30 years of experience with Zijin Mining and CITIC, China International Trade and Investment Corporation. He has watched the Chinese use the power of the state to support their mining industry's international aspirations. He has taken a lesson from the Chinese. He himself utilizes the power of the Chinese state in Congo. He utilizes the power of the Japanese state in South Africa. He now is looking forward to utilizing the power of the Saudi crown and the United States state. This isn't about any one project. He's not working on any one thing. He is working on the fact that he sees the next 10 years as being the best 10 years in his life in the mining business. And he understands that strategically, at the level he plays, you know, Kai, he's not about jitneying a 25-cent stock to 75 cents. He's about building empires. He understands that the highest and best use of his time is at once learning how to exploit the power of the state in support of his enterprises and also lowering his cost of capital. He plays the game at a very different league than most of the people that you and I run into.
Oh, 100%. I think there's no doubt about that. Absolutely. Rick, you said something really interesting that I had lined up as a question, as a follow-up. Like, he uses the power of the state, especially in the Congo, because he's been working with the Chinese there. And my question now is, like, yes, he's been using the Chinese because I think the Chinese sort of were the security blanket over his operations, but also financed him because the Congo, as we all know, is a hotbed, as we've seen with the M23 rebels coming in. But now the US is also stepping in. So, and the Congo seems to be being of more interest because the second the US announced that they're giving security to the Congo, surprise, surprise, Jeff Bezos and Bill Gates marched in there, right? So my point is, like, what I'm trying to make here is, like, how important is the state, of course, to enterprises in the Congo, for example, or like the Congo? And do you see the US and China potentially clashing in the Congo?
I think it depends on the will of the state. The Chinese believe, perhaps rightly, that without the power of the state, because the Chinese enterprises were so late to the game being international extraction investments, that they required the power of the state, both the soft and the hard power of the state, to compete, particularly in Africa. The Chinese have not been constrained with the Foreign Anti-Corrupt Practices Act in the United States and similar legislation in Europe. So part of Chinese diplomacy is what we'll laughingly call direct drive. In other words, they can bribe. But their soft power has been much more important. The Chinese have been willing to invest in African infrastructure on terms and conditions and with a rapidity that other governments have been unwilling to do. In addition to that, the Chinese have provided their own hard power, which is to say, there are Chinese security forces on the ground in Congo, protecting Chinese interests while at the same time advancing the economic well-being of the Congo. It's important to note that Chinese infrastructure investment, Chinese commercial investment, and Chinese mining investment has been a really important driver in individual employment throughout the southern part of Congo, formerly known as Katanga.
No, absolutely. It's like with a new train line from Congo to the Angola, and Blinken was there, and now the security blanket from the US. I think it'll be interesting. And I'm curious if political interests will clash there, whether that's going to be the new hotbed.
And I wonder if they'll clash or cooperate. You know, about 5 months ago, Chinese people that I have done business with for a very long time, mainland Chinese, I mean, reached out to me and said, by the way, we have been instructed by the party to reach out to and maintain cordial relationships with individual Americans. The state-to-state difficulty is not intended by the Chinese state to interfere with commercial interaction between Chinese and Americans. And I think that this is official Chinese policy, which means I think that because Mr. Trump and Mr. Xi are both extremely transactional, that there will be competition at the same time that there will be cooperation. To the extent that that cooperation is viewed as being in the interest of Chairman Xi or President Trump.
Rick, how are politics influencing your investment decisions these days? Like we just touched on the Congo. Is the Congo of interest yet again? Like last time we talked about Canada still being tier one, a tier one jurisdiction, right? So how much are you being influenced these days? Because things are changing rather quickly on certain fronts.
You know, Kai, I am willing to accept a lot of political risk in my portfolio, and I've been punished for it from time to time. But when I look back over 50 years, pardon me, a focus on projects rather than politics has worked out well for me. The single best jurisdiction on the planet for me, money in and money out, has been Congo. I've exposed myself to a lot of risk. I've exposed myself to a lot of fear. And I have made what is for me an absolute boatload of money. The worst jurisdiction for me personally, in terms of political risk that I experienced that resulted in loss, was the People's Republic of California. It's interesting. And I'll just say this, we're going to get a lot of hate after this in the comment section of your channel. But the truth is that people that look like you and I tend to believe that money stolen from us by white people in English through the legislature, according to the rule of law, is somehow less gone than money taken from us in more overt fashion by people with different skin tones in places like Africa. We hearken to the rule of law, but in a circumstance like I experienced in California, where for almost no reason whatsoever, permits were delayed for 13 years and required $16 million in informal bribes, campaign contributions, deeds in lieu, needless studies. Political risk is in fact where you find it. The Canadians will tell you that Canada's a tier one jurisdiction. And yet they just appointed a prime minister who subsequently, of course, won an election, running ironically on a platform of change. And he decided yesterday that Canada wouldn't have a budget. Wouldn't have a budget. Now, how does that feel in terms of political risk? You'll recall his predecessor said that the budget would balance itself. And the outcome of that is economic performance in Canada for a decade that was substantially less than the economic performance in the United States, which was itself anemic. Consider the political risk associated with a jurisdiction that doesn't have a budget. Consider the impact that that might have on fiscal policy, on taxation, on royalties, on infrastructure investment. So I think political risk is really where you find it. I have been blessed in my life in Congo to have invested very early on in Kilomoto, which became Kabanga, one of the biggest gold mines in the world. I was lucky enough to be with the Lundins in Tenke-Fungurume, one of the biggest copper mines in the world. I was lucky enough to be with Robert Friedland in Kamoa-Kakula, one of the largest copper mines in the world. And the ability that those entrepreneurs had to navigate the political and social risk of Congo and the extraordinary nature of those deposits meant that although I was exposed to substantial political risk in Congo, if you measure the jurisdiction by money in, money out, and time value of money, I've made much more money in Congo than I have anywhere else in the world.
No, absolutely. Like the question is now, like all the promises about cutting red tape and permitting and whether that will play out. Like I'm really
Trump can do something there because he is beginning to have the political support of the American people. It's important that your investors know, Kai, particularly your European investors who are less familiar with America than they should be, that regulation in the United States is tripartite, federal, state, and local. And I take Trump at his word because I've begun to see, in terms of the Federal Energy Regulatory Commission, the lessening of the red tape associated with project permitting. I have seen that with my own eyes. But you need to understand that when some of the objection goes away federally, you still have to deal with state and local. What that means is that if you're an investor in extractive industries in the United States, that you, to the extent that you're able, focus on the state of Texas, the state of Wyoming, the state of Nevada, and the state of Alaska. Constituencies which have a social and political mobilization in favor of extractive industries. There are a couple of other states that are threatening to improve. I think Idaho is a state that's threatening to improve. I hear very good news coming from both the senator and the governor of the state of the state of South Dakota. I think New Mexico may be moving in the right direction. Certainly Oklahoma is important in the oil and gas and headed the right way. But the point of all this is that in addition to having a national consensus around extractive industries, you need state and local participation too.
No, absolutely. And I think that support is coming with all the headlines and, China being vilified as well and supply chains just being disrupted. I think we're headed that way. So I think that's something positive we can take away. Rick, natural segue, of course, we have to talk about the mining stocks real quick as well, the performance or lack thereof to a degree. I know you're shaking your head. It's puzzling. It feels like we're getting the rug pulled under us yet again. Gold is, being weaker. What do you make of the latest moves in the miners? GDX has retreated a little bit. GDXJ is still far from its 2011 highs. What do you make of the performance of the miners here the last couple of months?
I think the miners that have deserved to move have done spectacularly well. We've talked about this before, Kai. If you merge every public junior in the world into one company, Junior Explorco, there's 3,000 of them or something like that in all jurisdictions. That company would lose between $2 and $10 billion a year. So what should it be worth? If you, I believe that no more than 10 or 15% of the listings worldwide are viable. And if you do any sort of qualitative separation in a mining stock portfolio, it's done spectacularly well for 2 years. 2023, I remember you and I talking about the fact that the gold price had moved and the price of the gold stocks hadn't moved. And I was able to suggest at that point in time that there were 2 reasons for that, 3 maybe. The first was that the gold price was moving because foreign central banks were buying, and foreign central banks don't buy gold stocks. So one asset class that had buyers moved, another asset class that didn't move. The second reason might be because of the piss poor performance of the mining sector in the decade 2000 to 2010, where the selling price of their product increased 7-fold and the free cash flow per share exhibited by the Philadelphia Gold and Silver Stock Index declined. A third might be that in 2023, while the gold price was moving up, the cost of inputs, particularly energy, skilled labor, and tax, was moving up faster, so margins didn't expand. But margins began to expand in 2024 as the increase in the gold price exceeded the increase in the inputs to produce it. And you began to see the more efficient producers blow away earnings estimates. I don't mean beat them. I mean obliterate them. The consequence of that is that in the last 18 months, the high quality gold stocks, the Wheaton Precious Metals, the Agnico Eagles, the Alamos, the Lundins, even smaller companies, G Mining as an example, that delivered cost containment, have done extraordinarily well. A precious metals bull market, in my experience, and this is my 4th bull market, follows a very predictable pattern. The bullion moves first. Absolutely moves first. It's driven by the bullion. It's driven, in fact, by the fear buyer. When the bullion price moves fast enough that margins increase, the fact that free cash flow is increasing and the fact that the underlying momentum of gold attracts investors into the space, the biggest and the best producers move next. That's the part of the market that we're in right now. This global market, make no mistake, it's underway. And we're in the second phase of the bull market now, where the biggest of the best, the Agnicos and the Franco-Nevadas and the Wheatons, are stomping on it in terms of performance. When that happens, valuation discrepancies emerge in the market. Companies that are single asset producers, companies that are less efficient, lag in terms of their price per share. They have a higher cost of capital. One of 2 things happens. There's either valuation arbitrage, where investors like yourself and myself begin to come down into lower quality companies because the valuations by any realizable metric are cheaper there, or the bigger companies with a lower cost of capital take over the smaller companies. That's phase 2 in this bull market. Phase 3 is when the best of the rest move. Phase 4 is when the developers move, and phase 5 is when the exploration companies move. It's important to understand that these markets follow absolutely recognizable patterns. It's also important for your listeners, Kai, especially the young ones, the ones under 45, to understand that if you aren't prepared to do the analytical work, that you don't need to generate alpha in a bull market. You don't need to outperform the market itself, because the beta in the market during a gold bull market, and I define beta as the amount by which the gold industry outperforms regular equities indexes, is so extraordinary, 250%, 300%, that many people who aren't prepared to do the work or can't stomach the volatility or can't take the risk should compose a portfolio of the best, just the best. Don't mess with the rest, and go about their lives. Read books, do their work, garden, whatever appeals to them. I think making 250 or 300% over 5 years in what is effectively, at least operationally, a riskless transaction is not a bad outcome for a lot of people.
Can't complain about that, can you? You shouldn't, at least. Rick, I got a completely random question for you here, because you talked about due diligence. It's something when I was preparing for our conversation, came across was AI. Do you use AI at all for your due diligence?
I'm teaching myself too. I have to say there's 2 processes there. One is my own lack of faith in my technological competence. But what AI is really, really, really beginning to be useful for is screening. Let me tell you some of my personal progression, Kai. 25 or 30 years ago, I would get 5 years of quarterly reports from mining companies, and I'd pull the statements out and I'd lay them down on a very long conference table, and I would spend 6 weeks looking at the performance, the interplay between the balance sheet and the income statement, quarter by quarter by quarter for 5 years. This took me about 6 weeks per company. Now, I wasn't employed 10 hours a day doing that. I use an hour or 2 hours a day, but for 6 weeks. Then a very, very, very smart woman came and showed me how to do all of that on Bloomberg. I could deconstruct these balance sheets without pulling staples. I just had to know the right questions to ask Bloomberg. But I was confined to the Bloomberg database. I think in 2025, I will be able to do that with AI, and I will be able to cause it to occur in 15 minutes. We compress 6 weeks of work into 15 minutes. And I suspect that once I understand how to ask Grok or somebody else the question, that I can ask the question of the whole rankings database at Rule Investment Media. In other words, I can monitor financial performance and abnormalities for 800 companies, and I can allow AI to do it for me, so that rather than do the quantitative work that I've had to do slavishly by hand for 50 years, I'll be able to focus on the qualitative work. If you know how to ask valuable questions, I think AI is going to be a truly spectacular tool.
I want to see a Rick Rule boot camp about AI prompts.
Once I'm confident enough in my ability to identify a team that knows how to use AI, in other words, once I have enough confidence in my team's knowledge that I can be a teacher, not a student, I will do that. You will notice that when we choose topics for the boot camp, they're topics that at least I know how to assemble a team that's an A-class team. Too much of AI in the mining sector right now is promotional. People use AI to attract the attention of naive speculators, as opposed to using AI as an investment tool.
No, you're right. And it's a good segue, actually, to talk about your upcoming Rule Symposium, Rick. And maybe you should have a session there about AI in mining. And I don't mean really AI in putting models together. That's beyond my scope, because it's all data dependent, I guess. But AI in due diligence. I think that'd be really cool, like 35-minute or 30-minute keynote.
Not this year. I need to get better at it myself. I have to be able to offer up any segment of my conference with a straight face.
Yeah.
At my conference, our promise to our attendees has always been, as an example, that every single exhibitor is vetted. We turn down more exhibitors than we accept. The exhibitors have to be owned in accounts owned and managed by the conference sponsors. That same level of involvement extends to every aspect of the conference. I have to believe that I know it well enough that I can select speakers who are an accurate representation of the themes. And I don't have that much confidence in AI yet, or at least in my own knowledge of it.
No, fair enough, of course, but it'd be interesting. It'll be an interesting, like, what do you call it, development in general, something fun to watch. Rick, you use the opportunity, like Rick Rule Symposium. Sadly, I won't be able to attend this year. I'm traveling with the family, but I know it's a high quality event. I was there last year. Who are the speakers this year? What can we look forward to?
Well, Kai, you have no excuse because you can attend online. Last year,
from Australia, it'll be difficult.
We had 1,000 attendees from 33 countries, and the recordings will be available for a full year afterwards. Whether you attend live or via live stream, access to the recordings will be important because the information is timeless. And we'll give you more information, 52 hours of programming in 4 days than you could absorb in 4 days anyway. So access to the recordings is absolutely positively invaluable. You asked about speakers. The speaker I'm most excited about this year is David Stockman. Wrote a book called The Triumph of Politics. He presided over the original Department of Government Efficiency in the Reagan administration, the Office of Management and Budget. And he wrote a book detailing the political derailment of the Reagan Revolution within 6 months of inauguration. He's written a recent book called How to Cut $2 Trillion from the U.S. Budget. Of course, it will not be followed. The important thing about David Stockman is he's not a failed journalist. He's not a two-bit analyst. He's speaking in a biblical sense from the belly of the beast. He ran the original Department of Government Efficiency, which was the Office of Management and Budget. Moving on from her, Nomi Prinz, a spectacular human being, talking about the structure of Wall Street, not as some flunky journalist from some pinko school, but rather as a former partner at Goldman Sachs. Daniela DiMartina Booth will talk about the Fed, not as a journalist, but rather from the belly of the beast, as a former analyst of the Fed. Jim Rickards will talk about the intersection of Wall Street and the government. He does it as former general counsel of long-term capital management, whose failure almost took down Wall Street. We'll have other great people too, the living legends, people like Robert Friedland, people like Randy Smallwood, people like Bob Quartermain, people like Ross Beatty, people who have built multi-billion-dollar mining or oil and gas companies from scratch, telling you how they did it. And remember, you'll have access to all of these proceedings via recordings for a year, which you'll need. The final thing I need to say is that if you choose to attend my conference, either live or live stream, and you don't think for any reason whatsoever that I have delivered you sufficient value, I'll give you your money back. We have offered absolute full satisfaction or money back guarantees for 30 years. We've only had to refund about 0.1% of the tuitions that we've charged over 30 years, but we're confident enough in the lessons that our speakers teach and in the viability of our exhibitors, given that we refuse more than we accept, that we offer a no questions asked money back guarantee.
Extremely valuable. Rick, it's like, as I've ever been there, I was like happy to give glowing reviews. It was a fantastic event because you also get to spend time with the keynotes and panelists, the boat cruises, and very other networking events, of course, as well. So very, very valuable. Like our conversation, very valuable. Rick, tremendously appreciate your time. Thank you so much for coming back on, and good luck with the conference.
Kai, thank you so much. Remember, the conference tapes are as valuable as the conference. You have no excuse.
I know. Like, I can't follow live because I'll be in Australia, but you got a good point. I'll need to sign up for the lessons there. Thank you so much, Rick, for coming on. Everybody else, thank you so much for tuning in. Really interesting conversation with Rick Rule. Today, more mining focused than more monetary focused. Next time, we'll have to talk about what Rick thinks about a new Bretton Woods system and how he's playing that angle. But in the meantime, make sure to follow, like, and subscribe to our channel, and go check out the Rule Symposium. It is a really valuable event. I speak from experience. I had the chance to go last year. We were media partners, and I tremendously enjoyed it. So please do that. Thank you so much for tuning in. We'll be back with lots more here on Soar Financially. Take care out there.